for as of the end of the most recent fiscal year of the issuer, and this how. So now, who should run this 404 assessment process? The 404 assessment process, ideally speaking, or generally, if you see the practice done by finance, or they prepare a separate section. The companies have different practices within finance who are responsible for this, like head of internal control. Some organizations give the responsibility to manage or monitor, monitored by internal audit, and it can be outsourced. I've seen the cases where they've outsourced the assessment process of 404. Also, so this is how, I mean, like, it depends, like, what the structure of your organization is, and this is how it can be managed. Under section 302 of the assessment which is needed, which required a quarterly assessment, and there is an annual assessment which we spoken in the last bullet point, which is 404. So this assessment overall covering the internal controls efficiency and the design of that, and also it's also talking about the compliance with generally accepted accounting practices. So at the end, what is the outcome of all this exercise? That it requires that there has to be a reasonable assurance over this internal control system over the financial reporting. And if there are this report, because once we are having this overall internal control mechanism in this assessment process, they need to also identify there are changes in the ICFR or in the internal controls, which has material effect. So all the changes also this highlights. And at the end, then CEO and CFO, they certify to disclose all significant deficiencies, material weaknesses, and in the design operation. And the CEO and CFO shall also certify to disclose all frauds that involve management or other employees who have significant roles. So this is having, actually, if I just put in bullet points the whole 404 program, it starts with, as we said, that the role can be given to finance, internal audit, maybe a SOX committee is there in some organizations. So this is the first phase where you allocate the responsibility. The first step of 404 is responsibility allocation. Then we have a project plan where we will do the materiality set. We will set the materiality. We will talk about the risk assessment. We'll define the scope, and then we'll move to the third step, which is review and documentation. So we'll be having a time tracker or maybe a risk and control metrics to control the process flow. We can have process sign-offs, which is very important point to have all along the line, all these sign-offs, and also the process improvements if you identify in between during this review and documentation phase. Then we have a testing phase, which is we see that we have the meetings, the walkthroughs, the evaluation of the design and the effectiveness. All this is done in the testing phase, and then we'll reach to the next phase of assessment. So here we are assessing the effectiveness of the internal control over financial reporting. And once we will do the assessment, definitely there are some findings coming out of that. There might be some good news, some bad news. We need to see what are the areas which we need to address. So here comes after assessment a mitigation phase, where we highlight the control weaknesses. We will see the design issues. Will either revise the whole design. Will adjust some part of the design. Maybe will mitigate those control weaknesses by implementing some controls. So this is depends upon the type of uh, uh, mitigation exercise which we are doing and the impact of that. And again, a cost part is also very important. Like for example, for all the control weaknesses, you cannot implement preventive controls for all the weaknesses. Maybe sometimes it's better to put preventive control than detective or corrective controls. So it depends upon on that. And then come the final phases, which is the management report on internal control, as we discussed in the previous bullets, and the auditor's attestation comes after that. In this, there is actually uh, if you guys have worked on SOX compliance or on this exercise, this is actually there is a whole area of defining materiality. I mean, like the first phase, as I said, when we are actually after allocating the responsibility, we are defining the materiality. So we need to define materiality in terms of different areas of revenue or expenses. It has to be a dashboard. It's better to control it by system where we can have a planned materiality level. We can see that where we are in the actual level, and are we lacking behind. We need to adjust. We need to see all these areas. So that is again an exercise which is more relevant to how we are assessing the whole scope based on the risk scores which we are giving, and based on the materiality which is set. Uh, there are some good resources also available. In the end of this session, I will give you the references also. Like there's a lot of data you can go and review. Uh, uh, for example, if you have read Robert Mueller's COSO ERM, it's a very nice book. It provides a complete like 404 compliance review work breakdown structure. So it's really very interesting if you see that, because that provides a detailed process of how you have to, like, sorry for the because again my throat is dry a little bit. So you have to assemble a review. This provides a really detailed guideline on just break down the whole structure of how you need to establish your 404 compliance review work. Like you have to assemble a review team. This may be led by internal audit or finance or others. Consistent terminologies which we will be using. So now, for example, if we have given responsibility to one department, but this exercise is across all the departments and operations. So that's why what terminology we are using, there has to be a harmony in between the departments and functions. Uh, then when we are defining the project objectives, again, the whole team, sometimes SOX committees there, will be coordinating on that, defining the objectives. Uh, Again, there's a good guideline on how to develop a detailed project plan covering the process to be reviewed. And there are several processes all along the line you have to be reviewing. They have to establish review approach for each process, and that again includes a lot of things like you can identify the types and nature of key process controls, the risk associated with uh, failure of those controls. You have to define nature and type of possible errors and omissions. I need to define the nature, size, and composition of transactions to be reviewed. There are so many other things like establish guideline for materiality errors significance. and understand the process transactions susceptibility to errors or omissions. So there are so many, even the volume, size, complexity of the transaction process. All this is part of this area where you have to establish the review approach for each process, and it's a detailed, the detailed phase during this whole process of compliance review of 404. And then you have to review the approach and timing of with the external auditors as well, because there is one part which is covered by the management, but external auditor has to be involved when, because external auditor has to attest this part. So that coordination is really important. So it's not only coordination within the organization, but outside the organization is very important. And in this process, you need to establish standards for review of documentation. So there has to be a detailed guideline on this, that how, what standards we will be setting, what the project progress reporting methodology will be adopting. Then there is a complete preliminary reviews of each process which we are identifying, including if we are updating some documents, some adding some documents, amending some documents in this whole process. It is quite possible we have done review, annual review once. We are coming to the next year, and there are major changes in the processes. So that all has to be documented when all these changes are happening. That's why it's very important to understand. Follow up and resolve any items requiring investigations. So after all this assessment, as we checked in the mitigation area, like there has to be some control weaknesses, design issues, there can be any other issues. So we need to see and investigate what we can do about these issues. And then this is the time we need to, when we are doing this compliance review, and before the attestation time comes, we have to address this with the best possible solution to the company. Then all this exercise has to be consolidated, has to be subject to consolidated review. And we need to prepare a preliminary report on 404. That report then goes to the CFO, who reviews it, and then there are several back and forth movement, and then you finally release the report. There is another methodology I've seen in SOX implementation is that the people has used the process flows. The documentations they have done is in the form of the process flows, where the transaction is moving from step 1 to step 2 and step 3, and then what documentation simultaneously with the transactions are coming out, what documents are being updated, who are the key uh, uh, job descriptions attached to this. All that is also is documented in the part of in the form of a process flow, which is more understandable, because once the team involves reviews the process, they understand it in a better way. They can coordinate in a better way. They know that where their timeline starts, from where their responsibility starts. So that is why this is something I have found very useful practice for particularly when you are starting from scratch, there is no structure exist. So that is something, a good method actually, that provides even I found several times control weaknesses, material weaknesses in the design by this method, because you need to involve with the stakeholders on regular basis. There are frequent meetings, and it's not only one meeting. There are several meetings, discussions, several changes, and then you find out that there are so many things you can do with the system. There are so many gaps in there, and we need to work on those gaps. Also, we discuss about defining a scope in 404 program. Uh, the defining a scope part, I mean, it can take many approaches. Management can take many approaches on that. Uh, it can be a top-down approach, a risk-based approach, process-based approach. I mean, like you can take a compliance-based approach. So top-down, bottom-up, like these all approaches are there. Uh, Ideally speaking, what I prefer, if you are starting the process and you have ample time, better to go with the process based. Why? Because in process based, you are trying to cover everything because you have time. You are starting from scratch, and then you can always cover your risk based approach within the process base at a later stage. But this provides you a good coverage of all the system. If you have less time and you are starting very late, you can take compliance based approach so that at least you're not non-compliant, but you need to come back to the risk based approach, which is protecting the business as well. This is the main purpose is not compliance only. You need to move one step ahead. So in this, we need to see that we are not making a minimum compliance, but we are actually protecting the organization from future potential risks which may arose. I mean, like if so, that is where that is the beauty of Sarbanes-Oxley Act and all this 404 program. That sky is the limit. If you want to make it larger, to make it more efficient, you want to give benefits, you want to think beyond compliance, you can take all benefits from this. So that's why defining, when you're defining your scope, your approach is really important. Then we have code of ethics. So what is the requirement of Sarbanes-Oxley around code of ethics? Obviously, they wanted the organizations to have a code of ethics which should be adopted, and there has to be a code of ethics specific for the key executives, and there should be a disclosure requirement like that for the audit committee, that like disclosure of financial expert as audit committee member. So this is also part of the same code of ethics. So when audit committee is delivering their activities, and if they are not uh, aware of what they are doing, then that is an important part. So that's why a financial expert's presence on audit committee is more linked with the ethical and professional, the role of the audit committee. They should not sign on something until unless they are not sure about it. And when we talk about financial expert, we are talking about a financial person who is having a thorough uh, education as well as understanding and experience of it as a public accountant, as an auditor, as a CFO or controller, uh, as a principal accounting officer, having understanding of gaps, uh, experience in the preparation or auditing of the financials, and application of such principles in connection with the accounting for estimates, accruals, and reserves, and also have a good handy control over the internal accounting controls, because the internal controls over the financial reporting when we're talking about in 404 is directly linked with that. And also he should be aware of the understanding, having the basic understanding of the audit committee functions, what authorities audit committee is having. So because this was a bit longer section and asked financial disclosures, I'll just quickly like repeat the whole part in a small summarized form so that we are not losing our way forward. And this is the most important area in Sarbanes-Oxley. So we spoken about the disclosure requirement, where the Sarbanes-Oxley wanted financial reports to be accurate, and it does not contain an untrue statement of a material fact or omit to reflect any correcting adjustments identified by auditors. And it should be in accordance with GAPs, SEC rules and regulations, and disclosing all material off balance sheet items as well. Again, the prohibition of personal loan disclosures from any transactions of the which is involving management and principal stakeholders, more than 10% stakeholders, and these things. Then we come to the 404 or internal control report. This is the management assessment, which is eventually management will provide an assessment. They will provide that the statement or the establishment of and maintenance of the adequate internal control structure and procedure for financial reporting. Also, there is the internal control report requires a statement identifying the framework which management has used to conduct the required evaluation of the effectiveness. And once we have the we have established the structure, we have done the evaluation, we need to see the effectiveness of that as well. So that is an important part which management has to mention in the internal control report. And then the auditor will and attest on that. Then we have covered the basic of the internal control over financial reporting, like what is the quarterly assessment, what is the annual assessment, who can run the 404 assessment process, what we have to do if there are changes. The control of this whole exercise is very important. The step-by-step process, which we have seen, like the responsibility allocation in the 404 program, project plan. There is Azan. Let me just stop it. Okay, then we saw the step-by-step process of 404 program, which was the 8 steps program. I told you, I'll repeat the 8 steps: the responsibility allocation, project plan, review and documentation, the testing phase, where we'll be doing the walkthroughs and the evaluation of the design. Then the assessment, this is the assessment of effectiveness of the internal controls for financial reporting. And then mitigation, where we are identifying the issues and design or there are control weaknesses. Management report on internal control, and comes the final stage of auditor's attestation. And then I discussed the COSO ERM compliance review work breakdown, that how Robert Mueller has identified this. For reference purposes, you can see that that is something really useful. How what approaches we can take for this 404 program. Again, depends upon your the nature of your the current scenario. Actually, like it's depends upon the what skill set you are having, what time, how much time you have, and then you can go ahead with the relevant approach, which can be compliance based, risk based, top down, bottom up, process based. All these approaches we were talking about. And then we were talking about this code of ethics. So there has to be a code of ethics. So if you just see the overall changes, the whistleblowing hotline, code of ethics, access authority to audit committee, the establishment of public company accounting oversight board. So remarkable changes these are, really help overall in improving the processes, in creating a deterrent over all these financial scandals which that happened at that time. Really put a real control over those things. Then we will be talking about then the accountability and penal actions. So now this is something, again, as I was just saying about the deterrent. You can see the penalties and the imprisonment which is given really heavy. 20 years of for altering, destroying records. So if anyone alters the record, destroys the record, I mean, like 20 years of uh, jail term sentencing is there. 25 years securities fraud, 10 years of willful violation of SEC rules. If it is identified or it is proved to the court that you have done a willful violation, 10 years is there for that. Then if you are certifying incorrectly, knowingly, $1 million penalty, which is again, or can be both, 10 years imprisonment is there. And if you are willfully certifying incorrectly, so the main characters around that who are actually doing that, it's $5 million, up to $5 million, the penalty, and 20 years of the imprisonment is there for them. Other than that, there are some already implemented criminal penalties are there in some acts, which Sarbanes-Oxley Act has enhanced by big time. So those are also there. We're not putting everything here, but the main part is that if there is any alteration or if in the records, or if you're destroying the records, there is a penalty for that. There is a punishment for that. There is a if there is a willful violation of SEC rules, there is incorrect certification or willfully incorrect certification is there, then these penalties are there. And if you assess the data after 2002 and now, we have just seen the data from report to the nations in Association of Certified Fraud Examiners. Similarly, if you see only US-based data, you will see there was a huge reduction of these cases like Enron and so these were, you might identify a few, but again, after the implementation of Sarbanes-Oxley, it has really have a good impact on enhancing the investors' confidence, which is really work for, because it came all with all authority. It came with that authority from the top, with which really helped in implementing. the robust procedures for monitoring and control by the regulators. So that this is a teamwork. In fact, and like you have to have a political scenario attached to every act and every regulation. So if you will not be having full support on any law or act you are bringing, uh, then maybe you can implement a law, but you need to see the effectiveness of implementation. We can see that a lot of countries, maybe African region, South Asia, we have laws, but the main part is how much these laws are effectively implemented, how many of these laws are effectively implemented. It's really, I mean, like we know the ground reality around that. Okay, so now this is the small brief. I will also just bring you to one certification on SOX compliance, which we are planning soon. That will be, this is just a brief introduction. That will be more detailed one, which will be coming with templates and more detailed exercises around uh, the Sarbanes-Oxley Act implementation, the compliance part, as well as developing a full 404 program. Uh, the basic, uh, actually, I mean, like I've seen the key objectives of that overview is just to understand the background and basic purpose of Sarbanes-Oxley, to understand the importance of corporate governance, because it's all around corporate governance. That was the buzzword after Enron and all these happened. To learn the key components of SOX Act and then understand the significance of auditor independence, and to learn SOX compliance requirement and enhanced disclosures. This is and it's more than that actually. I mean, I'll just quickly go through the brief course outline. uh, it's uh, it's spread in 3 modules, and each module is 2 hours session. We will be discussing first the occupational frauds. We will be talking about the basics of Sarbanes-Oxley, the key objectives of Sarbanes-Oxley. We'll talk about the key components. The most important part, which we could not give time today, was the abbreviations and definition, because that will make the foundation and base of the whole exercise. You need to know what are the definitions for each and every area, which is very important. We need to know the COSO framework, because Sarbanes-Oxley gives us opportunity to use these frameworks. We need to know these 5 components of internal controls, which most of you will be aware of. We can use COBIT to have good controls over the IT process. So we can use these frameworks for the purpose of SOX. And again, as I said, it depends upon your approach. It's based on compliance. It's based on it's risk based. It's an opportunity. How far you can take it, I mean, it's up to you. Uh, and that will definitely benefit the whole organization and the future of the organization. We'll be discussing the case studies on these financial scandals in more detail, actually, the basic need, purpose, the approval and applicability of SOX, like that is applicable on which companies, ethical program, because this whistleblowing mechanism is part of the full ethical program which companies are implementing. This is one area where which is very important, but it's much wider subject to discuss than merely the hotline part. And then certification of financial statements, which is based on the complete process of 404 program. So we'll be just touching, we'll do a touch base on that in that session, signing officer's obligation. And then we'll jump to the module 3, which will be having more details about this, which is again a 2 hour session. So the whole program will be 6 hours. The third module will be about the improper influence forfeiture. We have just learned the definitions of these, the blackout period, attorneys. We can discuss this in more detail. Financial disclosures, what is the requirement for financial reports, and then the statements which are being filed by directors, officers under Section 16 of Securities and Exchange Act 1934. So uh, for ICFR, we'll be having detailed discussion, all this, the whole 404 program, defining materiality, what templates we'll be using, how process flows can help us in that. I have some uh, templates which I have worked on. I've used myself, I've prepared myself some process flows which I'll be sharing with you. Audit scope based on risk score as per control self-assessment. This is here the role of control self-assessor is like a facilitator, where we are more discussing about the control weaknesses from the management's point of view, and you are just providing a facilitator role there. This is a very good exercise when you want to improve your and authorize the public company accounting board to provide foreign auditors, the authorities to audit, and domestic audit firms to secure the working papers of the audit. So there are some changes we will discuss in detail about the Dodd-Frank Act, that what areas it touched for the SOX and what was the impact. Then there was a Jobs Act. It's basically for the new organization, Jumpstart or Business Act, it is called. It came 2 years after Dodd-Frank, so it was in 2012. And it identified a new category like the emerging growth companies. It has a detailed definition of emerging growth company, EGC, and why they are exempted, for what is the period, all that is all that detail is provided in there. Another important area is the use of a solution or application to have a SOX program, uh, which is very important. So that is also we will discuss in detail, that how a system can or application can help and reduce the work and make it more efficient, the whole process. Because once first time exercise always takes time, but once we will reach to the next level, after having everything in the system, it will definitely uh, prove to us more efficient. So this is all the details. I've given some references here, and even if you want to go and check these references, there's a good data here around that, about the Sarbanes-Oxley, about any standards relevant to that, maybe the electronic data, gathering system, which is from the SEC, and all these details are there. So I suppose we have ample time for the questions. If Izhar, you want to say anything, or anyone wants to ask any question, please, we can start it now.
Thank you very much, Jos. If you allow me to comment on that one, based on my experiences, I just want to say a few comments. Actually, I have privilege to work in a couple of US-based multinational company for more than 8, 9 years at different senior level and finance come operation department. Yes, you rightly mentioned once in especially the US-based multinational company, the source is very, very important, very, very critical. There is no compromise on SOX non-compliance. There's a full-fledged department in the US with multinational company. They look after SOX and they directly report to the senior management. For example, if you are working in the company in Dubai, so they don't report to even the regional level, the SOX team or the SOX manager or SOX compliance head, they report to the higher management in USA. So in US-based multinational company, the importance of SOX is very high. That's one. Second comment I would like to share my experience with you based on different US multinational company. Uh, Generally, the finance head, he or she used to sign up with the area operation head, for example, managing director, for example, operation head. That's how they sign. The third point I would like to comment and share my experience with the audience, that one, there's a system-based SOX compliance reporting. It is not like that one you put the documents. There are different areas where you and the managing director, the operation has to sign, one from the funds and one from the operation side. Both has to sign with the threshold. Even on some of the points you might disagree, you're supposed to put up the comments. If you disagree, the system will say it has not approved it, go to the next level. The compliance team or the different team, they used to look after where the disagreement is all about. The point what I'm trying to mention, that one, as you rightly mentioned also, okay, there is a balance of power between both the sides, the operation and the finance and control, and it's a system driven. They look after through system. It is not like that one you can get away or you can put up the comments here and there. And the SOX team, they see very carefully the SOX compliance requirement, and of course some of the points and some of the areas, generally they are monthly SOX requirement. You are supposed to sign up for the monthly SOX requirement, and some of the points the company say yes, you can sign up on quarterly basis. It depends on areas of sensitive areas, or depends on the area to area. Thank you very much, Tasif. It's a wonderful informative session. Over to you now, please.
Now, just I want to know that this is a very important point you have highlighted actually, and now I would like to give time to answer questions. So, can we see the chat, or if someone can unmute? Someone is.
I think the audience has the capacity. They are unmute. They can raise a question. They can ask, they can show the
Okay.
reaction via the chat box, and they are open to the question.
Okay. Stop sharing the screen. So I have, yeah. So Irfan, I think who is this? There is a question on the sharing the slides.
Not a
Okay.
question.
Templates possible. Yeah.
Hello.
Hello. Yes, Irfan. I think.
Yeah. Yeah.
Yes, Irfan.
No, I have no question. I've
Okay,
just
fine.
listened to it very
Uh,
quickly. Thank you very much for all that.
Tausif, I have one question.
Yes.
If you can enlighten us, like I was just wondering that from the reporting perspective, or for the CFO or the governing officer of a company, do they need to report of any confirmed malpractice or accounting status, or if it's an alleged issue, like it hasn't been established yet, there is something which is being investigated or something like that. So do you also need to make a mention of that in any report or anything like that, or only once it has been confirmed? Do you have any information on
Very good question actually, Umar. Uh, the Sarbanes-Oxley Act clearly says all fraudulent activity. Now, the question is established or not established.
yeah,
So in
alleged
this
or
case,
yeah,
yeah, because if we have like a case which is in the process of investigation, it's not finally established that something has happened.
yes,
Uh, the main thing is communication should be clear to the audit committee, whether it is in process or it has happened. So the whole all the activities or fraudulent activities which are identified has to be communicated to the audit committee. Now this is the role of audit committee there, that how they will take it, they will further discuss it, and they will assess the impact of that. So the main thing is Sarbanes-Oxley categorically says that it's all the fraudulent activity. Now, establishment or not establishment, established definitely. I mean, like there's no question about that. That we have uh, a case which is decided and we know the convict or the person who is involved in that. But there might be some cases where something has happened definitely. So we know the fact, some of the fact, but who has done it is in the process of investigation. So what something has happened that can be assessed by the audit committee. So wherever is the process of investigation, that should be communicated to the audit committee, and then audit committee will accordingly take a decision on that. It's more about more communication between the audit committee and the management and the auditor. Like all the parties has to have all the information. We cannot stop this because it's not established yet.
Yeah, Tosi, if you allow me to further add on that one for the sake of audience, generally how it happens from the finance point of view. For example, as Omar rightly mentioned, if something comes in between which, according to Omar as a finance head, let's say it's a non-compliance or there's a gray area. For example, the return is not proposed to finalize by 30th of September, but you haven't finalized return for any good reasons. Or maybe the operation wanted to take another provision or something else is there. So the finance head, he will put up the comments in terms of against that function or that areas. There's an apparently non-compliant. Even though the operation head, he will say to me is compliant, but the finance is saying it is non-compliance. So once he will document that fact, it will go to the next level of the SOX compliance team. They will pick it up. And because the finance head or the finance department is the related party, because they are the whistleblowers as a control function. So once it comes to the audit and SOX and compliance team, they will take up the issue from there and they will investigate where is a problem and why it's a problem. Generally, they used to come back and they try to find out the reason that there might be the operational limitation. Because of that reason, there is apparently non-compliant. But if they find out there is a practice or there is a, organized practice to avoid any to get any benefit, to avoid any control or to any lapse, that's how that's gonna become an issue for everybody. I hope I replied you.
Thanks, Izhar, for elaborating it further. I mean, it's a good point.
Thank you, Izhar and Tausif. Yeah, because I was also looking at from the compliance perspective, which Izhar has touched, like if let's say we need to comply or an organization needs to comply with, let's say an example, environmental protection agency regulations. So if the law changes or there is a gray area, as Izhar mentioned, and the the legal team is also of the opinion that it hasn't been established yet that we are in we are non-compliant or partly non-compliant, partially compliant with the regulations. So in that particular case, what onus or what responsibility does the management have? So they just can mention that in their notes, or how does how should the management react to that? Should they mention that or just keep it until and unless it has been established? So that was the main question. Yeah, so that's fine. Thank you.
Yeah, now if you allow Tosin, let me take it up this question, because I've seen recently the same issue the EHS department Omar is referring to. Yes, it time happens when the DC, when you are working in the FMCG company, right, and the operation, the DC team say, yes, we need to have the EHS department there, and EHS is a different legal and local and international requirement. When you say management, there is no management. It's a crystal clearly responsibility for the finance and non-finance. So we cannot, in the SOX, you can't generalize it. If everybody is responsible, then nobody is responsible. We are talking from the finance and the functional requirement and functional responsibilities. So if, for example, this area which comes to my radar is a SOX requirement, right? And they say, guys, each department should be established. And the finance department say, yes, it's not there, it's a non-compliance. Fair enough, you have done your job. But if the EHS department is required and finance department say, yes, everything is okay, there is nothing as yet, then you are equally responsible as far as the SOX requirement is concerned. Tosif, you can add on that one if I clarify.
No, you summed it up, like, because this is ICFR, like internal controls over financial reporting we are talking about. That's why the role of finance is core over there.
Thank you, both of you. Thank you.
Thank you. Going to resume.
Thank you, Omar, for the question. So if we don't have any further question, then like put it in the chat. You can send an email. Also, there's an email given to you in the communications. So if you have any further question, like you can directly email and then we can get back to you for any of your questions, queries on Sarbanes-Oxley Act, on the reporting, on the certification course which we are having. So we can get back to you on that. I think over to you, Mr. Zahar, on this.
I think if the audience has no more question, then I think we can sign up. And thank you very much, Tausif, to explain this whole session in detail. It was quite informative, and thank you very much for the audience to join the session. As far as the certification is concerned, for the certificate program you already mentioned, but for the CPD requirement who has attended the session, please send an email to me with your proper name, the formal name and company name, so we can issue the CPD certificate for that 2-hour session for the audience as well. Thank you, guys.
Thank you so much.
Thank you. Thank you, everyone.
Thank you.
Thank you, everybody. All right, guys, I think we can sign up, sign off, Tausif. Thank you very much. Thank you to everybody.
Thank you.